Good morning, traders. Manny Cabrera here from MDC Trading Academy with today's pre-market forecast for Wednesday, May the 4th. Today is Fed Day, as we can see here from our reports. That's the biggie this morning this afternoon at 2 p.m. FOMC statement, federal funds rate, and at 2:30 the FOMC press conference. So this is basically where the market is hanging at right now. Although we do have some other news at 10 a.m. We have ISM services PMI. Again, more information about prices. Inflation is the talk of the town. It has been since late last year. And of course, last quarter was a phenomenal increase. And of course, April and May don't seem to be disappointing in reference to that point. And that's what we're seeing in the market as the Fed continues to slow down the economy in order to avoid inflation. Of course, it's affecting stock prices. So let's jump to what we're seeing this morning in our daily chart. Here we go. Where are we? A new intra-year low since the beginning of this year. We have established a new intraday low and new yearly low at 4,081. Who thought we'd be there this year, actually, after we ran down from this particular intraday high, not intraday high, yearly high, all-time high, to this support level here. Boy, have things changed. We had 1, 2 record lows, and then we eventually broke that here on Monday. Today we're starting off this low, continuing a so-called 3-day rally with high volume and a lot of volatility. But today, my friends, if you're gonna take a day off, I think today this is the day that you might consider that, simply because of who knows where the market is going to go in reference to this. The market is very fickle when it comes to interest rates, very fickle when it comes to Fed intervention. So that's where we are. Here we find ourselves this morning in our pre-market between the intraday high and low of yesterday. A lot of compressions in this market, just continual compressions. We see a compression here. We see a compression that broke here. We see another much larger compression here. We have this compression. So the market is shrinking. It looks like it just wants to get to a point probably before the announcement, although there's plenty of room for the market to move here. It's pretty choppy within these areas, so be very careful. Just wait for the breakouts. Maybe for the breakouts from these areas here, maybe up to here, potentially a break from here, potentially a break from here to here, and then potentially here. You need to wait for the confirmation. You're having these wild swings, strength to the upside, strength to the downside. Here we go, strength to the upside, strength to the downside. Slow move up, strong move down, strong move right back up, slow move up, strong down, chop around, pop up, shoot down. A market that seems to be in derision right now. It's just very confused. It technically, we've absorbed a lot of this information. Technically, we've absorbed a lot of this information in this market in reference to the anticipated rate change. But markets can change their minds. Once the market makes up its mind about one thing, the market can definitely move the other. So that's what we're seeing right now. So you have to be very careful. And again, my personal suggestion is, hey, if I were you, I'd stay out of this market today. Let things settle, let the dust settle, and wait for the bell from tomorrow morning. Check it out, friends. Let me know if you have any questions.